Hi guys, Jennifer Winton with Remax Moves. So I wanted to make a couple short videos talking about the 4 types of loan programs available to my buyers. I get a lot of questions because I work with first-time home buyers, so I thought it'd be great just to give you a little overview of all of these. The 4 that I'm going to talk about today are conventional, FHA, USDA, and VA. And I also wanted to mention there are specific loan programs out there for our heroes. So firefighters, police, EMT, nurses, and teachers. So if you fall into one of those categories, just know that there are more specific programs available to you. And I'd be happy to help you out with those. Just let me know. So before I get started talking about those 4 main programs that my clients use, I did want to make sure you understood what private mortgage insurance is. So PMI is what we refer to it. So private mortgage insurance basically is insurance for your lender, and it protects them against default from the borrower. So if you weren't able to pay your mortgage, it protects against that for them. So pretty much any of these types of loan programs have PMI. And you can pay for PMI in one of 3 ways. You can pay for it monthly with your mortgage. You can pay for it up front, which is what my husband and I did. We knew we were going to be in our home for, 5 to 6 years. So for us, it made more sense to pay for it up front because we were able to save some money. But if you think you might only want to be in your house for a few years, then that might not be the way to go. And then the last way is that the lender can pay for it, and usually the interest rate is affected, but that's another option for you. So when I say PMI, remember that's private mortgage insurance. Okay, so the first loan program that I'm going to talk about is conventional. So out of all the programs I'm going to talk about today, that is typically the most attractive for sellers to see when they get offers in. Cash is always number one, but typically a conventional offer is considered to be the best over the other loan programs. And, this could be for several reasons. Typically conventional, people who have conventional loans have larger down payments, so the sellers feel more secure in that decision. But also, if you have a conventional loan, the requirements of the property are not as strict. So with FHA, USDA, and VA loans, the property has to meet all these requirements, and they have to have specific appraisals as well. So, but for the requirements, like some of the things they look for, they basically just want to make sure the house is safe and that it's not falling down, because they don't want to provide you with money for a home if it's not safe. So some things they look for, like there can't be any peeling paint. If an electrical switch doesn't turn anything on, or if it's not working, that's another thing. If the hot water doesn't work, that's another thing. So again, with conventional, these requirements are not as strict. So that's another reason they're kind of seen as better. I will say, so with the conventional loan, a lot of my first-time home buyers think that they have to have 20% down, and this is just not true. There's a lender that I work with that you can get a conventional loan for 3% down, which is awesome. So just know that you can pay more for your down payment if you want to, but you don't have to. Once you have paid your home down to 20%, then your private mortgage insurance, your PMI, goes away. So that's great for conventional loans. You no longer have to pay it. In our case, we just paid it up front. But if you paid it monthly, once you got down to 20% of your value of your house, once you pay 20% down, then you wouldn't have to pay PMI anymore. So that's great. You can also, with a conventional loan, get gifts from your family members. If they wanted to help you pay for it, help pay your closing cost or your down payment, you can be gifted money. So that's also an option for conventional loans. So next is UP FHA loans. Let's talk about those.